Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market update for Wednesday, January 15th, 2020. For subscribers of the site, this will be pretty much mostly a recap of the previous analysis I posted in the pre-market update with the FANG stocks and the levels to watch on the major indexes, as well as the follow-up video this afternoon in the midday session. That also included updates on some of the trade ideas that we're focused on now, which reminds me, and I know there's probably always people coming and going into the YouTube channel on the site. Just to tell you what Right Side of the Chart is about. It's a freemium service, meaning there's free and premium content. Free content is just general broad market analysis. So when I glance the comments, I put 40 to, on average, I'd say 50 to 60 hours a week, no less than 40, sometimes 70 hours a week between my own trading and the website. And my focus has to be for subscribers, getting back to them on chart requests, comments, and trade ideas. But as I often say, and it bears repeating, 90+% of what I trade personally and the trade ideas that I share on the right side of the chart are not the stock market. They're everything but what you're seeing on the public YouTube channel. Those are individual stocks, individual sector ETFs, commodities, commodity ETFs, futures, currencies, bonds, Bitcoin, you name it. Everything else, and those are the things that are moving. And I go over the charts, and I've said this many times. The market is in a unmistakable uptrend. It's a very powerful trend. It's not a runaway market. It's not a blow off top, but the trading ranges have been small, and the pullbacks are being contained. I'll get to that in a second. So what I'll just go over is, for example, just today alone, in the last few days, we've had, a lot of the lithium stocks. Back in mid-December, for example, I was bullish on the lithium sector, and I started posting updates. Did a video covering my favorite picks in the sector, and we'll go over these today just to kind of give you an idea, because now a lot of these trades have already hit targets. And again, the trade ideas as far as individual stocks, anything but the broad market, or if the broad market, if we get some movement and we have official trade ideas, that is premium content for gold and silver subscribers. So these are just a few, and all of these were highlighted back here just a couple months ago. In fact, we'll go over that right here. And that was in, let's see, it was in this one here. You can see, for example, LIACF, screenshot from that video. With a buy signal come there. These are your price targets. That was then, as of a couple days ago, we were up here. We had hit that target for 173% gain. That was on Friday. And LIACF today, let's pull that chart up for you and show you. And these are just some of the trade ideas there. So from the breakout point now, we're up about a little bit. We overshot that target by a little bit. Some of the others that were highlighted, and again, just to drive home the point that there is a lot of trade ideas out there other than the market. And until the market has a correction, when it's going up, there's no resistance levels. There's nothing to price target. You can take guesses, but we don't have any technical analysis, at least the style I use. I'm not a big fan of Fibonacci projections and things like that. Your guess as how high it goes is as good as mine or anybody else's. So I'll go over again just a couple of the things that we've been trading and highlighting lately. OROCF was another lithium stock right there with the buy signal to come on break above 185.61 because it had just taken out the trend line. And as the other day, this was Friday, we were up 29%, and if I'm not mistaken, that one's still going. And again, OROCF, not a lot of meat left on the bone. You can see there was a very well-defined target zone when you have two levels in close proximity. We hit that target zone to almost to the button right there in the center in reverse, and that's what you get. And that's why I'm sharing these ideas. They're not a lot of meat left on the bone for those. Some of the other ones mentioned, on that video. LTUM Lithium Corp right here. Just in the last week, this one's gone up 123%, and the list goes on, so we won't go over them all now. And that's I'm not cherry picking any one sector. Throughout a lot of sectors, some develop, some don't. And again, what I always say, it's you have to look for there's a difference between a bullish or a bearish setup. The stock market is a bearish setup, awaiting a sell signal, high probability sell signal, and awaiting breakdowns like I went over the FANG stocks today, and I've been doing that recently with some levels to watch that need to be taken out. Same thing with these lithium stocks. What you need to see, and we have, is not just one, but a majority of the stocks breaking out, and that's what we did. All right, so there's last one we'll share here. LAC up about 37%, and still room to go, but these we're getting to the point where we're going to get some pullbacks. This one will probably pull back here soon, and then you may be able to recycle in. The other ones, just yesterday I shared my early in the day, all these stocks right here, these are all in my watch list, top holdings in MJ, my favorite picks in the cannabis sector. And from that video, or I'm sorry, that was a static post. I'm not going to share those charts because those are still active trades. Those are plenty, I think, more upside to go on these. You can see right here we had OGI up another 45% today, I should say. HEXO up 16%. CT. So this is where, to me, the easy money is made. The market is tough. Market analysis is a dime a dozen. It's out there anywhere, and that's one reason that's free content. Now there are times where I reserve some of that for subscribers. ACB up 15%. TGODF, and keep in mind this is on the heels of a lot of these stocks were up double digits yesterday alone, 10-20% or more, and so you can make in a couple days what you can make in years sometimes in the stock market. And again, the market's going up, but it's grinding higher. So we're going to get to that right now and show you some levels to watch. All right, back to let's start with the Qs. And the levels I pointed out in today's midday video, I had highlighted on the 60-minute chart here. I had 219.46 as a support level. I added that on since that post this morning and said, we had a trend line here that needs to go, but what I have, this was a uppermost horizontal support level, 219.46. You can see just before the close, we pulled back to exactly that level there. That low was 219. Well, now it says 45. Earlier, right before the close, it was 46. I don't know. Looks like they changed that, but either way, that was that was here. It was from the video right there. So what we're doing is we're pulling back in the market. We're coming very close to triggering some sell signals. In fact, what I did is I also color coded the levels on the 15-minute chart. I had this morning what I put out for subscribers were these yellow lines. Said you need to see these yellow lines go. We got a breakdown of the trend line right there, but if I had two yellow lines, when I have two support levels in close proximity, that is what I refer to as a support zone, or you have to give the last of the two to break. I call it the benefit of the doubt there. You have, sell signal there on a breakdown, however you came to that code, the level I coded yellow is the level that needs to be taken out to trigger a correction down to any or all of these near-term targets right here. So right now, let's just focus on the first three. And again, what does that mean? We need a solid break. This is a 15-minute chart, so we didn't even get a 15-minute close. We dipped below there. We hit the support level where I had it drawn on the 60-minute chart almost to the penny there. And here, you see we dipped below, but we recovered right there right before the close. So that's a successful test of support and another test of the same line that I had. So that's the level to watch tomorrow. And as I shared in the video today, I think that level is going to go quick. I think we're finally going to get the first tradable pullback. That'll be anywhere from 1 to 3% is what I'm looking at right now on the Qs. And it could certainly morph into more, but let's just, first things first. The bid in the market has been resilient. Let's see, do we get a breakdown? And I cannot emphasize that enough. Do we get a sell signal? What do you want to see? You want to see an impulsive candle and a solid close on the period you're trading. 15-minute chart here. Better to see it on a 60-minute chart to close below that level. And then how impulsive is it? And what do they do? How aggressively did the buyers step in? And I also say this often too, guys. I might have a near-term pullback targets because, again, to me to go long is just a crapshoot. But what I have said is you can use these levels. One thing that I think I'm pretty darn good at is identifying key levels where you're likely to get a reaction on a stock. A reaction meaning a reversal, especially on the initial tag. So if you are a bull looking for another 20%, whatever the number is, 5, to 15, 20, 30, doesn't matter, more upside, then you can use these levels to buy the dip. These are levels where the buyer should step in, just like they did step in at that first level I had today. But again, everything that I've talked about now for really weeks, it hasn't changed. You have these divergences building. They're on the daily, weekly, all the way out from the monthly charts down weekly, daily, and even these 60-minute charts. You can see as I zoom in there, you can see the PPO a little bit better. We're diverging. We go higher. These indicators are not keeping up with price. That means the market's grinding higher. Again, it's not in a blow-off top mode. This is not what you would consider a blow-off top. It is a persistent trend. I'll give it that, but not a blow-off top. So I'm going to tweak that trend line a little bit. So there's the levels to watch, and still have this one from a few weeks back. Remember, we broke down here this trend line, and at the time these were my yellow, meaning the most important levels that we needed to break to trigger the first decent sell signal for a swing trade on the market, and we never did it. In fact, that 211.42 was hit perfectly right in the or near perfectly in the pre-market, or actually it was the after-hour session the night before. The stock futures fell to support, and QQQ and SPY both hit up, and that was on some, I think that was a missile strike over there, and so support held, and so that's the level to watch. Now again, we color code these lines up here a little higher, and that will trigger the next near-term sell signal, and trade it like you like. Step in and buy the dips if you think that's where it's going. But I'd say right now, let's just say this is my current preferred target. It's 216. Again, pending a sell signal, and that would be a 2% pullback. Again, not much, and nor is it anything that should amount to a significant portion of anyone's portfolio. The market's strong. The easy money to be made right now, and almost all the trade ideas on the site, if 90+% for months now, have been long trade ideas. Not cannabis stocks, the lithium stocks. In that same video, I covered the lithium stocks in mid-December. I was bullish on the energy sector, saying that's the best looking sector in the S&P 500 in my opinion, and to the best of my knowledge, it has outperformed up until recently, where I said we were going to get a pullback. I was looking for a pullback in crude, which we did get. So XCS, XOP, those were some of my favorites, and the individual energy stocks. Let me cover SPY for you, and we'll wrap this up. Maybe we'll get to the futures. I covered that earlier today for subscribers. Let's look at that. SPY, I need to go to a 60-minute chart here, and so this morning this was a level I had here, the yellow line, and you can see 60-minute chart. We've come in. I tighten that a little bit up like that, and we had two intra-period dips. So we say this: if you're trading a 60-minute chart or your 60-minute time frame, then what you want to have, especially in this market, you want confirmation. You wait for a solid 60-minute close. So these are just inter-period candle dips, just like this one. You have these little spikes through, but that's still with the bodies above there. That trend line support has so far held, and that's still the level. And we can add, actually, let's throw in a line right here as I'm doing this. It's comparable to that level on QQQ that we hit just before the close, and we'll add that one as well. Since it's just below there, you can see it's a horizontal price support, about 327.27 or so. And finally, look at the futures. NQ, the levels that I highlighted this morning, earlier today, were the two yellow lines. Said those need to break, otherwise we're, trend is still up unless they break, and that's this line right here, the uptrend line, which you can see we just walked up all day. That was that dip before the close, but again, 60-minute chart. Not only that, excuse me. About 90.23. You can see I had the line at 90.22.53. That rounds up to 90.23, and that was exactly the low. We pulled back to 90.23 right there, hit that support level, which again was a yellow line that I said need to be taken out, because you have two support levels. And all that happened so far, a successful test. In fact, that was a catalyst for a bounce back above there to print that 60-minute close and keep us above that trend line. Those are still the levels to watch tomorrow, and you can see first target here is at 89, about 89.67 or so, with a second and current preferred target there about 88.89 we'll call that 88.90, and I think that would also be about a 1.5% if NQ gets there. And again, that's just a quick pullback target. If you trade NQ, I don't have to tell you that's going to put a good amount of money in your pocket. A 1.5% drop in NQ is going to be better than $1,000 per contract. So, well worth it if if you're a futures trader. And of course, if you're a bull, you can buy the pullbacks to support as long as that works. That works until it doesn't work. That's sort of my own yogiism. Buy the dip. It's going to work until it doesn't work. And when it doesn't work, there'll probably be a quick, fairly crowded rush for the exit since this trend has been so kind of getting really lopsided, one-sided right now. I have to imagine there's been a lot of short interest cleared out in recent weeks here. ES, again, same lines I covered this morning. And the pre-market update, the yellow lines, and you can see we've held above that support line with the 3276-ish level right below. When that breaks, I'm looking at, I'll give you an initial quick target if you're an active trader and you want to cover on the first reaction. We'll probably get a little hiccup there around 3267, but this is where I think we pull back to about 3255 on ES or the S&P 500 E-minis, and that would constitute a drop of about I'm trying to see the numbers there. It's about a little less than 1.25%, and that meshes with that pullback target on NQ. Remember, I like to trade NQ or the small caps RTY because you get more bang for your buck. S&P 500 is diluted with steady Eddie dividend paying blue chip stocks, utilities. So when market corrects, the same things that go up more when the market's rising, which are tech stocks, and NASDAQ 100 is chock full of tech, they tend to drop more on the way down as well. So trade whichever index you want. And another thing, the reason why I cover both of these videos, whether I'm trading NQ or not, I watch ES because sometimes NQ will break down, but at the same time ES comes down to support, and there are a lot of traders that trade ES and the S&P 500 SPY. So let's say that NQ started to break support, but at that point in time, ES hits support, the buyers step in. Well, that breakdown in NQ is probably going to prove to be a whipsaw. So I like to see both of these levels. In this case, the lower line here at 32, around 3276, and the comparable level in NQ. Need to see those, and until then, it's more of the same. As I updated in the post this morning before the market opened, I covered the FANG stocks as well as Intel, and I showed a scenario that you could probably flip a coin or almost give it a little bit better than 50-50 odds that will make one more thrust up. It's just the way I'm looking at these charts. You can see the PPO here still above the zero line, and that would give us, it would simply extend the existing divergences that were in place at this recent high, give us one more divergent high with a little bit steeper divergence right there. So far the divergence has been kind of flattish. It's a little better here on the PPO right there on ES, but again, this or this, and that's the most likely scenario in my opinion. But even if we get that divergent high, remember that's not a sell signal. You could take a pot shot up there. I do think that's any marginal high from here will probably come down. And like I said, I'm doing this video and spend a little more time on it today because I think we're ready for that first breakdown. In other words, the biggest drop in the last few weeks. I think it'll be probably the biggest drop coming up since this one down here in early January. You can see there was some volatility at that time, and that's kind of abated somewhat. But again, the technical posture has not changed. Okay, and we'll wrap it up here. I'm not going to go over all the FANG stocks, but I will, touch on Apple. I think I covered this in one of the public updates the other day, a week or so ago. It's the same trend line. I've been watching this channel, and as I said, until Apple breaks, the market's not going to go anywhere. Apple's in an uptrend. It's the largest component of the stock market of the NASDAQ 100, S&P 500, working its way up this channel. Like I said before, when you're trading a channel, the MO is simple. You go long at the bottom of the channel, and you sell, take profits at the top, or short, and do that until it breaks. Now, this channel is very long in the tooth. So we're still pending a break. The yellow lines are the bottom of the price channel. You take everything else away, just look at that, it's simply an uptrend line, a very clean uptrend line. If you took all these other lines away, and that uptrend comes off the December 3rd low. However, we have a price support just below it, about 37, about 37. You can see it's the top of this gap right here, but they both come in close proximity. So you'd want to see that too if you're looking for, whether you're a bull, you're looking for where to pull the plug on the longs and stop out. You see the levels break on SPY and QQQ and NQ and ES I showed you, and you also see Apple break that level support, especially a solid impulsive break below a 60-minute close. I think the odds are good we're going to go and hit these early targets and possibly more. I talked about that in recent weeks. There is the potential for much more than that. Just have to take it as it comes. I always say the charts are dynamic, and so is my analysis. So, if we break down from the channel and we come down here, how does it look? And of course, if we break, the way it works is if you take out that bottom support around 287 or so, there's really not a lot there. I don't know if you guys can make out on the left here the volume of price histogram, but it shows you where most of the trades on this chart have occurred. There are big green and red bars right here saying a lot of people have bought here. And the way technical analysis works, the way the market works, is if we drop below the bottom, that thin zone starts right about here. Right about at my 3709 level. So when we break there, a lot of things have happened. You have a technical breakdown. You broke trendline support. You broke this price channel. I can, I'll never guarantee anything in the markets. Very few things. I can't guarantee it'll happen, but I could tell you with a very high degree of confidence when that level breaks, that trend line and 307, it'll probably usher in impulsive selling because there'll be a lot of stops there. If I was along, riding this channel up, buying Apple on every little pullback, that's where my stops would be. And then that would take us down. It's a thin zone. A thin zone works comparable to a gap. It's not exactly the same. There is a gap in there, but there's a few trades, but not a lot. That means very few people bought in this area right here, which again is that thin zone. I'll tell you, I know sometimes people tell me they can't see the some of the things on the chart, maybe it's monitor quality, whatever, but there it is. There's the thin zone. So it works like that. And, break that support, probably come down there. And it's not coincidence, that there's my first support zone, 300 down to 296. You break that, gets a little bit thin and down to about right here. And there's my next target there. And if that goes, then we come here, and that's a pretty good likelihood. Here's a trend line that that comes in. This trend line goes all the way back to August, and it hasn't been visited in a while. When I say visited in a while, I mean tagged. So that's certainly a possibility. But as I said, first things first. We got to get the sell signals or everything I just covered today. Maybe they come into play a week or two from now, or maybe a month from now. I'm talking about support levels at a higher level. Again, there's not really any resistance overhead when you're trading at an all-time high. So, all right, let's. I think we'll wrap it up here, and we'll pick it up tomorrow. Like I said, I've cut back on the broad market updates only because it's not really, when you're walking up trend lines like this and you're walking up price channels without any sell signals and the trend is bullish, there's nothing new technically to report other than levels to watch that are likely to trigger drops if they're taken out, and then if so, where to, because like I always say, have your ducks in a row ahead of time. Have these levels marked up on your charts because things can move fast. The market tends to drop a lot faster than it rises. And mark my words, at some point you're going to see weeks or even months of gains wiped out in just a few days. That's what happens when the market gets pretty lopsided to one side. And if you don't believe me, just take any chart, go back 10 years or more, and look at the S&P 500 and NASDAQ 100, look at the big drops, and then measure out on your chart, how long did it take, what kind of gains were wiped out, like right here, and that even the initial drop right there, that just small that happened in probably a week or so, wiped out all the gains going back to, tell me right here, about 5 months. So 5 months of gains were wiped out in about a week or so right there on the initial leg down. Then before all said and done right there, you wiped out, you're all the way back to this point, and you wiped out in just a couple months there over a year of gains. And again, that's how it works. So anyways, we'll wrap it up here, guys. And if anything big happens tomorrow, I'll do a end of day update on the public YouTube channel. Otherwise, we'll skip another day or so, and see what happens. Until then, I'm going to continue focusing on things that are moving up a lot more than 0.04% a day like today in QQQ. All right, I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.